All right, everyone. We've got some multiple choice questions on some audit evidence. Let's run through. So, when conducting an audit of a non issuer, the auditor's determination of whether the prior period's closing balances have been correctly brought forward to the current period or, when appropriate, have been restated would most appropriately support the auditor's conclusion of whether what. All right. So, I felt like that was a word full, as someone I know would say, word salad. So, definitely a lot going on. Again, when conducting an audit of a non-issuer, okay, so we're auditing, right? Determining whether the prior period's closing balances, so, it's period one, we're auditing period two. So we're doing an audit of year two. When determining if the end balances of year one, so the 1231 balances of year one, have been correctly brought to the 1-1 balances of year two, when appropriate, right, would most appropriately support the conclusion of whether what. Okay, so again, definitely a wordy question. Like you can tell, like I do these candid, right? So you can kind of see what's going through my mind. So you can see definitely a wordy question. So again, very important to highlight. All right, what are we doing? We're doing an audit of year two. We're trying to deal with the ending balances, the 1231 balances, right? Trying to make sure those are equal to the 1-1 balances. So that is our goal here. And we are trying to assess if it fits into a particular conclusion. Now, what would that be? What about the prior period financial statements should be re-audited? Yeah, I'm not agreeing with that there, right? We need to obtain sufficient appropriate evidence about these opening balances. So, right, like we can't, like, yes, the prior period has been audited. We can trust that, but we want to do a little bit of something, right, to verify that these opening balances are correct and all of that, right? So, I'm going to jump around a little bit because I feel like why not? What about the opening balances reflect the application of appropriate accounting policies? There's really nothing going on there. I mean, there's no similarity. Like, why would accounting policies affect the opening balances? I mean, hey, I'm not saying there's not a way, but for the purpose of the test, we're not thinking that in depth. I wouldn't worry about that too much, right? Audit procedures performed in the current period provide evidence relevant to opening balances. Okay, well, so again, when conducting an audit, determining whether the 1231 balances were brought correctly forward to the 1-1 balances, essentially what's the main goal? Like, what are we trying to concern ourselves with here? Well, not about the prior period financial statements being re-audited, right? So if they don't agree with each other, that's kind of what we're talking about here. We're not going to go ahead and say we need to re-audit the prior period, right? Because that's not our job. We were brought on to audit year two, so I'm going to cross up letter A, right? We're not. So these numbers, which should be equal to each other, right? The cash you have at 1231 should equal the cash you have at 1-1. Now, obviously, I mean, yeah, like things happen within one day, but right, we're saying generally these should be the same. So if there's massive differences there, then again, like that's not our job to re-audit the financial statements of last year. They were audited. That's a whole nother topic for another day, right? Different engagement types and dealing with predecessor auditor. What about audit procedures performed in the current period provide evidence relevant to the opening balances? And then we've got the opening balances contain misstatements that materially affect the current period's financial statements. So I would say, yeah, we are definitely concerned with letter D, right? And we even can bring this full circle, right? Something we saw here in our lesson. So we need to obtain evidence. And what is our concern is that the prior period closing balances, which are the current period's opening balances, materially affect the financial statements for this year, right? So the audit procedures performed in the current period provide evidence relevant to the opening balances. Yeah, no, I'm going to go with letter D here, right? Definitely a difficult question. And again, my whole purpose here is transparency. I'm not going to be like, oh my gosh, look at me. I mean, even though, yes, I've seen this a few times, I'm kind of going at this as fresh as possible to work through it together, show you my mentality, what's going on here. Yeah, not an easy question, but one nonetheless that we have seen in the lesson, have some grounding on, and you can do it, right? Let's keep moving on. Which of the following types of audit evidence provides the least assurance of reliability, right? Okay, well, we remember talking about a sort of tiered system, right? Essentially, the further away from the client it is, the more reliable it is. So the further away from the client. So if we're checking the stock price of a stock that the client has on Bloomberg, well, that's pretty dang far away from the client, right? The client can't hack into Bloomberg and change the price of the stock that would affect the entire American economy, right? So, but can we trust audit evidence that comes directly from the client? Meaning maybe it's what their own cash reconciliation. So that comes directly from the client, and as such, I would not put a lot of reliability on that. So that's kind of generally what I'm thinking of it before even reading the explanations, the answers here, right? So municipal property tax bills prepared in the client's name. So we want the least assurance of reliability. So this is municipal property tax bills. So these were done by a local government. That's pretty far away from the client, right? I mean, the client wouldn't be able to alter these. So I would cross this off because this has a high degree of reliability. And what about prior month's bank statements obtained from the client? So this has less reliability because you received the bank statements from the client. However, we're under the assumption that the bank statements obviously did come from the bank. Now, the best option here would be to get the bank statements from the bank because technically what? The client could then go in and edit the PDF of the bank statement. So, right, it's not as reliable as getting the statements from the bank, but nonetheless, still reliable. I'm gonna leave this here because I might find one that's less reliable. But so far, this is our least reliable option. Now, what about pre-numbered receiving reports completed by the client's employees? Okay, and like I said, right, if the client has a direct access to edit whatever we're talking about, right, or affect it, we are going to trust it the least. And that's why we have corroborating evidence. That's why we do substantive testing. So, yeah, I mean, I would say that letter C is kind of what we're looking for. As you see, it's something that the client has prepared, and we can't trust it. We have to use professional skepticism and get external evidence. So I'm going to say that's the least trustworthy option we have going on right now. It's less trustworthy than our letter B. So I'm going to cross that off. And what about receivable confirmations received from the client's customers? Again, this is something received from the client's customers, from a third party, from someone who is not the client, and the client likely, unless there's related party or some nature of that, has no bearing, has no ability to edit their customer's documentation. So I am going to go with the final answer here of letter C, right? Again, the main and really main only reason here being because the client has the ability to affect these numbers, to edit them, to do whatever they want to them. So I would be least trusting of anything completed by the client's employee. All right. When evaluating the impact of potential litigation, an auditor of a non-issuer should obtain audit evidence about each of the following except. Okay, so we'll see this, and maybe you skipped ahead, you saw that lesson already, right? But management, we're talking contingencies and commitments. Seen that in FAR, so it's a topic not unfamiliar to the exam as a whole. So we are trying to corroborate the possible effect of litigation, right? Because then we want to properly reflect the outstanding liability amount on the balance sheet. That's the whole point. That's why we're talking about this. It's kind of like, what the heck's going on here? Well, that's what the heck is going on. So what do we want? We want 3 of these and not one of them. So do we want the amount or range of the potential loss? Well, yes, I would say we definitely want that, right? That is something we want because if it's likely to happen, then we want to disclose or possibly accrue for that loss. So we want the amount or the range of it. So I would say yes, we want that. What about the probability that the matter will require a trial in court? Well, that's not something I have seen. It's not something I'm familiar with. I mean, basically what I'm saying is it's not the right answer. We're concerned with how likely is it to happen, right? Because if it's likely to happen, then we might have to disclose it. So the probability of an unfavorable outcome, yes, we would want to know that as well. And then also the period, because if it's in next year's period, well, we're not going to worry about it till next year. We want to make sure that whatever happens is properly disclosed in the proper period. So there we go. We don't care if it's going to require a trial in court. And what's the alternative to a trial in court? Well, it's just settlement and out-of-court settlement. So that's kind of what it's talking about. But we don't care about that. That's not something we've ever really covered here in the exam. Very much so, yeah, not our concern. Final answer is going to be letter B. When an audit requires verification of material accounts receivable balances, what would they most likely do? All right, well, we've got positive and negative confirmations from management and from customers. So, first off, right off the bat, right, we're going to say no to any of these management. Why is that? Well, as we discussed in prior question, we want evidence that is as far away from the client as possible. That way they have as little possibility of influencing it as possible. So we don't want anything to do with management. Reason being, we have options for customers. So likely going to be letter A or B. Now, do we want a positive or negative confirmation from that customer? Well, think about that first, right? What is the difference between positive and negative confirmations? Well, with the positive confirmation, we are going to actually see supporting information, right? So, negative confirmation, we are only going to receive that back from the client, or sorry, the customer, if they don't agree. So, positive confirmation requires more effort on the part of the customer. It requires the customer to say, yes, okay, we do owe them $100, right? Whereas the negative confirmation is only going to be submitted back to you as the auditor if the customer says, yeah, no, that's not correct. We don't owe them, right? Negative confirmation, if the amount's correct, they're just not going to respond to you. So essentially, the positive confirmation, right? And just to recap, we've talked about this before throughout the exam. Positive confirmations are more accurate, give more evidence, they're better, but they require more effort on the part of the respondee, right? The customer. So you're less likely to get an answer from the customer. So that's the trade-off, right? You might get less confirmations back if you do issue negative confirmations. But again, just a trade-off, different options there. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.